Hello and welcome to Rajya Sabha Television. You're watching The Big Picture with me, Frank Rausen Pereira. India's economy appears to be shaking off a slump, Bloomberg reported on Friday. The report said activity in the services and manufacturing sectors expanded for a second straight month in December, thus suggesting the worst could be behind us. Bloomberg News reported that the needle on a gauge measuring so-called animal spirits signaled the economy may be taking a turn for the better, as 5 of the 8 high-frequency indicators came in stronger last month. The dial was last at the current position in August. Meanwhile, IMF chief Kristalina Georgieva said growth slowdown in India appears to be temporary and she expects the momentum to improve going ahead. Speaking at the WF 2020, she also said that the world appears a better place in January 2020 compared to what it was when IMF announced its World Economic Outlook in October 2019. On this edition of The Big Picture, we will analyze if the worst is over for the Indian economy. Joining me on the program today are A.K. Bhattacharya, Editorial Director of the Business Standard; Ajay Dua, former Secretary, Ministry of Commerce and Industry; Bhanuchandar Nagarajan, former consultant, World Bank. Thank you to all my guests for joining me on this edition of The Big Picture. Mr. Dua, let me begin the program with you. Let's talk about the economy and where it is at the moment. And is it safe to assume or safe to say that the worst could be behind us?
I hope so. We can't afford to see the economy slipping down any further. I hope it's bottomed out. That's my sincere and a fervent hope. And as Bloomberg has pointed out, some of the indicators, very recent indicators, probably are confirming this. The IIP, our Index of Industrial Production, is no longer in the negative zone as it was for at least 3 months. It is the one no longer in negative and a little bit in positive. That itself shows that the probably manufacturing is receiving some or is experiencing a sort of recovery. Then the PMI, our index of confidence, also is doing a little better than before. But where I draw my optimism is largely from the agricultural sector. And that's yet to be proven. But indications are that with good monsoon, which we have experienced, the sowing under the Rabi, in the Rabi season, has been good. Probably too good to be believed from the preliminary data, which shows almost 7 to 8% increase in acreage under major crops. The acreage under even pulses has been shown to be far above the previous ones. If this is true, that the food production is likely to go up, then I see one more window of, I would say, call it a relief or call it a hope, that the inflation which we experienced is CPI at 7.35 in the last month could probably also start tapering off, because 40% of weightage in CPI is food articles. And within that, so-called GOP items, right, ginger, onions and potatoes. I think the onions probably we have tied over the situation. Ginger crop looks like good. It's a very niche crop. But potatoes, I'm keeping my fingers crossed, because there are some reports that the farmers ran short of seeds for potatoes, and that could cause a little bit of a problem. So, broadly speaking, I would say that probably we should now be able to assume the growth path. It may be a slight one compared to the past, but it does offer some hope.
Okay. Ms. Bhattacharya, do you share the same sentiments as Mr. Dua, the same kind of hope and optimism? And what are the sectors do we need to watch out for if you are going to see a revival in the days to come? Mr. Dua is talking about agriculture and inflation. What would you like to point out?
Well, let me say that yes, agriculture shows some sign of hope. and not necessarily only because of the food output, but if you look at the manner in which the gross value added for agricultural sector, the way it's the nominal growth in the gross value added for agriculture has risen at a much higher pace than the gross value added in agriculture in real terms. Now the difference right now is 7 percentage points. Now a difference of 7 percentage points has rarely been seen in the last 5-6 years. It only means that in nominal terms, the agricultural sector is enjoying the benefits of higher food prices, which is why its nominal gross value added in agriculture is growing by around 9% compared to, in real terms, the gross value added in agriculture is growing only by 2 percentage points. So there is an almost unprecedented, for at least for the last 5-6 years, a 7 percentage point difference between the real and the nominal. It means that the farmers who have a marketable surplus, who can reach out to the market and sell their produce, are actually reaping the benefits of higher food inflation. This means that 66% of India's population, a large part of it may be going to the market, are actually reaping the benefit of higher incomes, which means that they will have more surplus and they might go into the market and revive the demand which is sadly needed. So therefore, on the agriculture, I am hopeful not just only for food production output, but also because of this nominal terms GVA growing at a faster pace than in real terms, which clearly income accretion effect will result in.
Right.
Having said that, let me say that the challenges of before the Indian economy can truly claim that it has shaken off the slump will be a long haul. It is not going to be so easy to shake the Indian economy out of its current slowdown phase, and precisely I will just highlight 4 factors which need to be kept in mind before we can actually shake off the current slump. Number 1, in my view, is the manufacturing sector and exports are both have shown no signs of revival. They continue to grow at a pace, and even if you look at the advanced estimates, they are not showing any signs of revival in the next 2 quarters. That's number 1. So therefore, economic growth, as the advanced estimate shows, first advanced estimate show that is going to be only 5%, and the nominal growth will be a 44-year low of 7.5%. So that worry is going to hang heavy, and it will not be easy to get out of that thing without the manufacturing and the export sector coming back into its normal growth phase. Number 2 would be associated problem from that growth would be the government finances. The government, which is to be the trigger and which has been the trigger for economic growth in the last 3-4 quarters, is right now having a problem in terms of having enough money. There are reports of even payment delays taking place. So the government's fiscal concerns, to my mind, is the second cause for or a challenge before economic growth can be revived. Third would be India's investment rate, which is still not revived, which is languishing at around 30% of GDP, which is not a positive thing, because you need to revive the investment rate if you want to see a long-term sustainable path of growth. And finally, the 4th point is the financial sector is still not out of the woods, in a sense that the financial stress of the financial sector is still not been resolved. So therefore, if you look at all the 4 factors and you look at the challenges, you have to come to the conclusion that yes, there are some signs, as Mr. Dua rightly pointed out, that whether it's the PMI or whether it is even in terms of the railway freight, there is some recovery there. But the issue is, can the Indian economy come out of this slump, my sense is that a slow and steady process will be in play, and it will be a long haul. So a recovery would be slow and hopefully steady.
Okay, all right.
I didn't quite, don't differ with him at all. I think the question put to me, if you recall, was have we bottomed out and can we see some growth going forward? And I alluded to some of these parameters to just expect that these fructify, these hopes or these shoots of some revival.
This is probably where we'll see the revival starting from.
Yes, absolutely. But
There's
all
still
those factors.
Yeah, there's still a lot more to do and a
Exactly.
long haul, and we need to go a long way.
Absolutely.
But this is probably where we can see the revival from, is what you're
That's
suggesting,
right.
and both are in agreement now. So that's good. So
Absolutely.
let's move forward
Absolutely.
then. Manu, as far as what has been done, in the recent past, really to try and address this particular slowdown, and what we can expect in the near future, your thoughts?
Actually, in our own personal lives and in our families, when we go through a downturn, like, we often wonder whether there is light at the end of the tunnel, but we all recover, do well and flourish, right? I think same is the case with the country. Many of the news about slowdown is kind of reinforced by social media, and kind of we come to sort of believe that it's a much bigger monster than what it actually is. If you actually take a step back and look at it, with the world growing around 3%, India is still among the fastest growing large economies in the world. And we just got news that in November, 23 lakh formal jobs have been added. If you look at the various sectors, Mr. Dua and Mr. Bhattacharya quite eloquently pointed out about the agriculture sector, because of the rise in prices, and also because of the bumper harvest that we expect because of high monsoons. Agriculture is looking good going forward. If you look at manufacturing, reports are coming that the inventories have bottomed out. One of the reasons for the manufacturing slowdown over the last few quarters was production has slowed down and inventories are being sold off. So the inventories have come down, in fact bottomed out is what I hear, because that is indicated through the power consumption. Like the power output is up by 2%. Like a couple of weeks ago, it was down 10% in November. So that is an indicator. As far as services, like what you mentioned in your initial remarks, the PMI shows that there is an uptick. If you look at the housing, Colliers just released a report saying that housing sales have already started to increase, mostly because of the interest rate regime. Like mortgages are down by 50 basis points. And as far as other infrastructure goes, Minister Mr. Nitin Gadkari was just mentioning a few days ago how over the last 5 years he has spent 17 lakh crores, and this year 5 lakh crores are up for investment in infrastructure. So overall we see quite a lot of good news coming up and a lot of green shoots. Let's wait for the budget and to see like how the demand part is assessed. I'm hoping the counter-cyclical fiscal expansion, but let's wait for a few days to see what happens.
Okay. I'll take your expectations from the budget as well, probably as the concluding remarks on the program. But since we spent quite a bit of time on our opening remarks, I'm going to ask my panelists to be brief in our next segments. Mr. Dua, Mr. Bhattacharya brought up the issue of exports. Let's talk about exports, and let's talk about how much of a problem really exports are, and do you believe that we need to get our FTAs in place as well as far as some of our exports are concerned?
Exports, as you know, foreign trade is with foreign countries. We have to deal with the situation rather than to force our point of view. We can indicate, signal, and our not signing the RCEP as a very clear signal to the community in this part of the world that we have to worry about ourselves, we have to worry about what the agreement could do to us vis-a-vis, in particular, China and to some extent daring business from New Zealand. The point has been made, we haven't closed the window, that we won't join it, and at the Raisina dialogue just about a week ago, the foreign minister said that we have also reiterated what I have just mentioned, that while we have to look at our interest, we'll be doing that with an open mind and realizing that there are benefits from such trade. I think going forward, it might now become easier to also deal with the EU FTA, something which has been stuck, and all signals are there that UK, I think we have probably reached out to them, and UK might be willing to get into very quickly a bilateral trade and investment treaty understanding with us. So those are positive things, and which does indicate that we do not want to be isolationist.
Right.
But at the same time saying that our interests, because we are an economy we are still an agrarian economy. We have to worry about what contributes to 66% or 65% of our rural population. We have to be absolutely cognizant of that, and that will probably continue to be our major concern. Having said that, we are not going to be able to improve our competitiveness overnight to improve our exports. So we would probably in certain markets have a disadvantage because it's going to take us a while to compete with Vietnam or Bangladesh or even Indonesia with respect to even our labor intensive items. But if barriers, non-trade barriers to our trade, which are there to pharmaceutical, to some of our other major products, are withdrawn as a consequence of RCEP, we could also see our exports turn for the better.
Okay, all right. So that having been said, Mr. Bhattacharya, how much has, have the global headwinds really had an impact on our economy, and how much has it really weighed down on our economy?
I think the global headwinds have been strong. You have had to face not only the shocks of a trade war between the US and China to some extent. You had to face the onslaught of a slowing Europe, and then the problems that we encountered in joining RCEP. So the global headwinds, and I did not mention the oil price instability of spiking for a short while, and luckily
yesterday,
yeah, it
we've
is,
had
yeah.
$4 fall ever
Yeah.
since that
So
unfortunate
luckily we have
development in
saved.
China.
So my sense is that exports, that the point that is you mentioned is very critical to any revival strategy from this current situation. Remember that in the past, whenever India has grown at 8 to 9%, or even once it was 9.5% or close to 10%, our exports were booming. That export share in GDP has come down from 20% of GDP to close to around 70% of GDP. So I think the critical issue here would be exports will have to be revived, and exports revival also means manufacturing revival plus improvement in the job situation in the country. Having said that, we need to understand the idiom of trade globally has changed. The trade is no longer dependent on tariffs. Trade has moved beyond tariffs. Unfortunately, I think the way we look at trade and we discuss trade and enter into trade negotiations, we are far too focused only on tariffs. We are not looking at the large number of issues which go beyond tariffs, which are non-tariff. Now, the question is that we have to train and prepare the Indian industry to come to terms with a situation where tariff is important,
Right.
but equally and if not more important is the non-tariff issues. And I think that education is required. So therefore, a kind of an export package which drives the Indian industry to understand the importance of non-tariff issues will be important. Along with that, I think there are important lessons to be drawn of what harm we can do to our exports by not reforming our factor markets.
Sure.
I mean, if you're looking at the labor, you're looking at the capital availability, and most importantly, the productivity issues of Indian labor, Indian companies, I think we have to come out with a comprehensive export package, and probably the upcoming budget will hopefully offer some solution to this this sticky problem on exports.
Sure. Okay. Yes, Banu, go ahead.
Yeah, so just adding to what my co-panelists were saying, some economists feel that the growth has already bottomed out Q2 financial year 2020. Mr. Rajneesh Kumar, the SBI chairman, was saying that the incidence of NPAs have come down. I mean, the Sensex numbers are up. The GST collection for calendar year 2020 was 9% over 2019. So lot of good things happening. But in terms of job creation, one of the things we forget sitting in Delhi is the focus on subsectors. Like if we talk about agriculture, manufacturing and services, right? Even if you go to services, if you look at, say, engineering design services, a $30 billion market, which can go up to like 4 times in the next few years. But this kind of a micro analysis is better done at the state level. So, I mean, it is a partnership, right? The state and the center. So, we should actually also look at that aspect and how progressive state governments are in actually bringing and trying to bring investments, the tax incentives and other incentives they give. So, it's kind of a bigger play around here. But as we see, we see a lot of momentum moving forward. In fact, if you look at personal loans and credit card loans, they are up. I mean, it has other implications, but what it actually says is Indian consumer is not totally cutting down on consumption. So, if you look at all the issues put together, definitely we are in for an upswing. There was a survey of economists that and banking sector heads that estimated that the growth for the next fiscal would be around 6.5 to 7%. So let's see, that's an optimistic outlook, but let's see how it goes.
Okay, all right. Now, closing comments from all my guests, starting first with you, Mr. Dua, with the best way forward and your budget wish list.
My budget wish list is huge, but I also know the constraints within which this budget has to be presented. There isn't much scope for the finance minister to give stimulus of any significant order. That's my number one point. Because, one, we borrowed enough, our debt liabilities, which we do not normally consider, and liabilities, we're not just talking about principal, the interest on it itself has become very significant. Committed expenditure, I was reading somewhere, about 54% of the budget is the finance minister has to take as given. Sectoral pension, salaries and debt service charges. So, of the remaining, how much will go into expenditure of consumption kind, how much will go into capital is again an issue, because we have to worry about one huge chunk of expenditure for defense, which is 3 lakh crore last year. About 10% also increase takes away a fair amount.
Sure.
Having said that, I would like to see in this budget expenditure taking place largely where the impact is quick, because we need revival.
Yeah.
And that will mean where is the capital output ratio less to get growth, where is the gestation period less so that you don't have to wait for too long, and where the multiplier effect is the highest.
Sure.
That if the input-output connections are large and one action leads to many others. So in most respects for me, it is the rural sector and agriculture which has all these characteristics.
Okay.
But having said that, I am not saying that you should not worry about higher outlay for startups and higher outlays for job creating infrastructure, which it may be the assets take time to yield, but in the process whole lot of jobs get created. That means which have a greater input of civil works rather than materials by and large.
Okay, all right.
Well, I will be brief, and what I would say is this, that both the space for fiscal policy as well as the monetary policy, because of rising inflation, is very limited. Yeah. So therefore, we have to see that in what way the fiscal policy tool is used with greater impact and greater efficiency. So therefore, the finance minister has to be extremely cautious in making sure that the investable surpluses of the economy are not completely crowded out by government borrowing.
Right.
So that's a big concern in my view. Although I am aware that the government has to use the fiscal policy as a counter-cyclical tool, but it has to be extremely cautious in exercising that option. Having said that, let me say that the time has now come to fix what is our delivery system. I think, announcing big outlays and big revenue projections is one thing, but making sure that what is already there and they deliver what is supposed to have been promised is very important.
Right.
So the delivery mechanism needs to be made more efficient, and so that the problems that may arise because of lack of numbers not matching with what was earlier given does not arise. It is important to come clean on the entire fiscal numbers that were presented in the last two budgets and let the nation know what is the actual extent of government borrowing, the fiscal deficit, so that the economy can take full advantage of the growth potential that lies ahead.
Okay, all right. And Banu, close the show.
I will actually just take 10 seconds. Two things, don't listen to fiscal hawks. Second is focus more on disinvestment and deregulation. That's it.
Okay, all right. On that note then, I'll call it a wrap on this edition of The Big Picture. Thank you to all my guests for joining me on the program and putting things into perspective for us. That's it from me. See you again next time.